Data released recently shows the average bank account balance by a family in America. I think you'll be surprised by the number. I certainly was. The bigger question, what's the right number for you? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. What's the average bank account balance held by people here in the U.S.? If I were to ask you that, what number would you come up with? I would have said, I don't know, maybe $5,000. Maybe 10 grand, thinking about how averages work, and that probably wasn't going to play nice with these numbers, which it certainly turned out to be the case. Take a look at this. Now, this data was released recently. I know it's a couple years old, but I just saw this headline. I was surprised by the number. The average bank account balance, $62,000. $62,000. That's the average. Now, that includes not just checking accounts, but savings accounts, money markets, that sort of thing. That's a lot. It's a lot bigger number. Now, average is different than median. Median, you take the highest and throw it out, take the lowest, throw it out, and so on until you meet in the middle. And that's much lower, around 8,000. And that just shows just how skewed these numbers are by those folks that just have an extraordinary amount held in the bank account, which I'm assuming a decent amount of people have that. But average of 62,000, way bigger than I expected. That median around $8,000, that is a little bit more in line with what I thought. Got the data here showing it broken down by age as well. I would expect that folks earlier in their career, it's harder to have a lot of dollars saved up, but still that average of 20 grand, even by the youngest age group, that's more than I expected. Is this information helpful? I would argue no. Even though it was surprising to me, it's not helpful because it gets you thinking how your situation compares to other people, especially for something as unique and personal as how you manage your cash flow and how much money you feel comfortable having in the bank. That is a very unique sort of detail. And so therefore, what's right for you might be very different than what someone else is comfortable with. So the real question isn't what's the average amount out there for people in the US and therefore you should be average. The real question is what's the right amount for you to have in the bank account for your specific situation. And the right process leads you to the right answer, okay? The right process leads you to the right answer. I've talked about this a lot. We help a lot of people with this. This is the blocking and tackling of your financial life. What I mean by that is a lot of good things are the result of getting these basics right. And so sticking with the football analogy, hard to have the big play if you're not doing a great job blocking and tackling. And so yeah, on SportsCenter, you're going to see the big play or the highlight will be, the big flashy play, but the blocking and tackling is what allowed that to happen. Same thing in your financial life. How you manage your bank accounts, your cash flow management system is going to lead to a lot of success financially or a lot of struggles financially. We call the right approach, the recommended approach to us, we call it the 3 bank account system. And this is going to not only help you have the right organization for your cash flow, but it's going to help you get to the right numbers for the averages that you should have in the bank account that apply to your specific situation. The first bank account is your immediate spending. This is your checking account where you're taking a look and here's how much money is coming in every single month from our jobs and whatever income sources you have. And then here's all the money that's going out every single month for the normal monthly expenses. Your fixed monthly expenses like loan payments or any subscriptions, that sort of thing. You know the exact amount and it's going to come out every single month. And then all your variable expenses as well. These are monthly expenses also, but it's going to vary a little bit. Groceries or going out to eat or shopping, gassing up the vehicles, those sorts of things. Those are going to be monthly expenses, but it's going to vary. That's all going to be calculated and tabulated within your your immediate spending, your checking account, you should have, going to average account balances, you should have a minimum amount. We call that a float, okay? Because what you don't want is in the ebbs and flows throughout the month of, oh, we just got paid, oh, we just had a bunch of expenses, oh, we just got paid, oh, we just paid the mortgage. You don't want to get to the threatening level where all of a sudden you're at risk of running the ship aground and having an overdraft, because not only does that create fees, which it doesn't help you reach financial success, also creates a lot of stress if that number is getting too close to zero. Therefore, you're going to want to have a float. A lot of people say $1,000. Really just depends on your average transactions. But that $1,000 float, or whatever it is for you, that's not going to be your average, although you'll touch there a couple times throughout the month. Your average might be a little bit between that. I would see the average being about half of what your monthly income is. So that's your immediate spending, and that'll certainly help with these numbers, these averages. Second bank account is your delayed spending, okay? And it's that term for a reason, not because it just, is really smooth. No, it's delayed and it's spending, okay? So this is where you are saving up in advance for known upcoming expenses. So if the immediate spending, your checking account, handled all the monthly expenses, their delayed spending handles all the non-monthly expenses. These are still expenses, but they're not going to happen every single month. So in order for you to be ready for them when they come around, you need to have some proactive awareness that those are coming and how much, so then you can set the right amount of money aside. So basically, in this delayed spending, which could just be one bank account, typically a savings or money market, or it could be multiple accounts. For me, it's multiple. Just keeps it a little bit easier if I chunk them into different kind of big purposes. You've analyzed, you've thought ahead of time, all right, here's how much we're going to need for insurance premiums, life insurance and home and auto insurance premiums that are come out once a month, once a year. I'd rather pay those once a year because it's a little bit cheaper that way. Car repairs, deductibles, a car replacement is another one. Home improvements is another one. And so you kind of add up, here's how much we want to have saved up, or here's how much that expense is going to be, and divide that by 12, and then you take that tabulated, that sum of all of those delayed spending items that you need to be saving up for, and you fit that into that immediate spending. You fit that into that monthly budget. So then you're saving up into that every single month. I do it actually every week, every Thursday. Money automatically transfers over. So then when those expenses show up, you've got the money, you're prepared. In this second category, this is where you're actually going to lead to a lot of dollars ending up being saved up in your average account balance, if you will, going back to this, to the title of this, where you might, depending on what you're saving up for, if it's a new car, we've got a 14 almost turning 15, and we're saving up for a vehicle for her. And so, or if it's a home improvement or a down payment on a house, something like that, you might have in this delayed spending a significant amount, $10,000, $15,000 saved up at a time. And that can really push your averages as well. But similar to the checking, collectively delayed spending, you're going to be saving up, and then you'll hit one of those expenses. It'll come down, a vacation, and then you'll be saving up, and then it'll be Christmas, and then you'll be saving up, and there'll be a big expense, right? So it's going to similarly be where it's going to ebb and flow, just like the checking account. And then finally, that third bank account, your emergency fund. I prefer to call it financial confidence account. This is where you're saving up into an account, typically a money market, where you've got the dollar set aside for an emergency, but very rarely emergencies should happen, and so these dollars are just there if you need them, giving you financial confidence all along the way. You should start with $1,000. That's coming from Dave Ramsey. I would start with $2,500 or a little bit more than that. But then ultimately, you're going to want to reach a level that you're comfortable with, and a level that should be around 3 to 6 times your monthly expenses, that immediate spending number, 3 to 6 times. A minimum amount used to be 10 grand, maybe 15 grand now. On average, we're seeing people 20, 25 grand, but it really depends on your specific, your unique situation, right? So going back to what do you spend on a typical monthly basis, multiply that by 3, 4, 5, or 6, depending on if you've got, reliable vehicles, if you've got, a newer home or not, if you've got young kids, if those kids are driving, those sorts of things, how stable your job is, those sorts of things are all going to influence how much you should have in that emergency fund. So guys, that's the platform That's the process, that's the approach that leads you to the right numbers of do you have the right amount in your bank accounts, right? And not compare you to the average out there in the US, but compare you to you. And when you answer that question right now, Goldilocks, do you feel like, we don't quite have enough, or no, it feels just right, or no, we probably have too much in cash? Answer that question for you, work with your CFP, and make sure that you have the right clarity and confidence when it comes to the amount of balances that you have in the bank. Work with your CFP on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.